Hello everybody. For our today's lesson, we will learn about MIA bylaw on professional conduct, ethics and practice, the importance of professional ethics. Part 1. Bylaws on professional ethics comprises of 3 parts. There are 6 sections in Part A General Application, which starts from Section 100 until Section 150. Section 100 Fundamental Principles of Professional Ethics. As a professional man, an auditor must at all times perform his work professionally. An auditor should conduct with courtesy and responsible towards person who engages him and also to the public. Section 110 Integrity. An auditor should be straightforward, honest, and sincere in their approach to their professional work. Integrity implies not merely honesty but fair dealing and truthfulness. Section 120 Objectivity. An auditor shall be and appear to be free of any interest which cause problem to his objectivity. Auditors shall protect the integrity and maintain objectivity in their judgment to not allow bias, conflict of interest, or undue influence of others to override professional or business judgment. Section 130. Professional Competence and Duty. It is important for an auditor to maintain and improve his professional services, keep his personal knowledge up to date with developments in practices and techniques, standards, laws, regulations, and bring due care and diligence to bear upon the discharge of his duties to his audit clients.
Confidentiality. Section 140. Auditor must respect the confidentiality of information and should not disclose any information to third party without proper and specific authority and continue to keep the confidentiality even after the end of relationship between auditor and client. Section 150. The basic principle of professional behavior require auditors to comply with the relevant laws and regulations and should avoid any action that discredits the profession. Section 150 Subsection 2 under Advertising, Marketing and Promotion. It is important to have good reputation on that profession and to ensure that such advertisement, marketing and promotion are in good condition. Part B. Professional Accountant in Public Practice. Threats may be created by a broad range of relationships and circumstances. Threats may affect compliance with more than fundamental principles. 5 threats, namely self-interest, intimidation, familiarity, advocacy, and self-review. Safeguard is an action to eliminate and reducing the threat to an acceptable level. It created by the profession, legislation, or regulation. Safeguard also created in the work environment. Section 210. Professional Appointment. Before the auditor accepts the nomination for appointment by a potential client, the auditor should complete the pre-acceptance procedure. Client acceptance. The auditor should consider whether the acceptance would create any threat to compliance with the fundamental principle. Engagement acceptance. The auditor should only accept audit engagement that he is competent to perform. Changes in a professional appointment. If an auditor is requested to replace another auditor currently appointed by the company, the potential auditor should exercise due care.
Let us proceed with responding to non-compliance with laws and regulations. These are the responsibilities of the client's management and those charged with governance. Next, we proceed with second opinion. A company which is not a client of the auditor may request an auditor to provide a second opinion on the application of accounting, auditing, reporting, or other standards. Next is audit fees. An auditor will charge a fee for his service. However, there are factors that may create self-interest threats. First threat is, a large proportion of the audit firm's total earnings is from one audit client. Second, overdue fee of an audit client. Third, pricing which is undercharged. And fourth is contingent fee. The significance of the threat will depend upon factors such as the structure of the firm and whether the firm is well established or newly created. The first safeguards is discuss the extent and nature of fees charged with the client's audit committee. Second, taking steps to reduce dependency on the client. Third, external quality control reviews. And cut down overdue fees. Next is marketing public practice services. In general, an auditor is allowed to advertise or publicize his business and to solicit for audit clients. However, any advertisement, publicity, or solicitation shall be conducted in the manner consistent with the good standing and reputation of the accountancy profession. Second, contain only matters of fact which are true. And third, be in good taste and professionally dignified. Fourth, not contain exaggerated claims of the services offered. Fifth, avoid belittling or denigrate the work of other members or member firms. 6. Not contain unjustified claims to be an expert. And 7. Be carried out in accordance with the relevant legislation.
Now we move to section 260, Gift and Hospitality. Gift or hospitality that go beyond normal courtesy should not be given or received, as it may influence action or decisions. Such an offer may create threats. For example, self-interest threat to objectivity if a gift from client is accepted. Section 270, Custody of Client Assets. An auditor shall not assume the client assets unless permitted by law, and if so, compliant with additional legal duties imposed on auditor holding such assets. Example of threat holding of client asset is self-interest to professional behavior. The auditor entrusts the client money or other asset belonging to others shall therefore keep such an asset separately from personal or firm asset. Secondly, use such asset only for purpose they intended. Next, be ready for account for those assets. And last but not least, comply with all relevant law and regulations. Now I will discuss about section 280, objectivity also. Auditors shall determine when providing any professional service whether there are threats to compliance with fundamental of principles. Example of threat is familiarity threat to objectivity. Therefore, auditor is required to be fair, intellectually honest, and free from conflict of interest when rendering services. Independence of mind and appearance is necessary to enable auditor to express conclusion without bias, conflict of interest, undue influence to others. The auditor also responsible to be independent of the audit client. The following section explain independent requirements for an auditor when performing an assurance engagement. Section 290, Independence, Audit and Review Engagement. There are two criteria to be independent: independent in mind and independent appearance. What is independent in mind? Independent in mind is opinion is formed without comprising professional judgment. While independent in appearance if interpretation of user of financial statement of the auditor independence. However, if the independent in mind and appearance are not compromised, the auditor should take responsible steps that involve: firstly, identify threat to independence, then evaluate the significance of the threat identified, and lastly, apply safeguard when necessary.
Part B, Members in Public Practice. Method of practice. A member not allowed to practice as a chartered accountant or licensed accountant unless in his or her name, in his or her partner's name, and in the name of existing firm. His or her partnership must entitled to be a member in public practice. Members should apply the proper name of the intended firm or practice, required to state his or her firm's number in any document issued by the firm. Professional indemnity insurance. Member required to ensure that his or her firm carries and maintains a policy of professional indemnity insurance with a minimum coverage ringgit Malaysia 250,000, and company must purchase policy from licensed insurance company. Death or incapacity of a sole practitioner. A member is required to enter into an arrangement to enable the practice to continue with minimum disruption in the event of death or incapacity in either of the following way: first, by entering into an arrangement with another member, and by satisfying the council that other adequate provision has been made. Referral. If the member receives an assignment by referral from another member, the member should not undertake any professional service from the same client without informing the referring member, because it will impair the position of that referring member in the continuing work with the client.